Hi, this is Dave Adams, and I'm going to talk a little today about fractals and trading Emini contracts. If you've been around traders very much, one of the favorite things, or at least pastimes to hear them do, is discuss the nature of the markets and the theory behind what makes them work. There's a wide variety of theories that different groups subscribe to. There's efficient market theory, there's straight technical traders, there's fundamental traders. Myself, I believe in chaos theory, and the adjunct corollary, at least for trading in chaos theory, is fractal geometry and fractal formations. Now I know this all may sound a little esoteric, and but it's really important to have to be grounded in what you're going to do when you trade, and have a firm understanding, at least a belief that the market works in a certain manner. Currently, no theory fully explains price action and the way the market actually functions, and I find that kind of odd, because we understand loads about the subatomic world in physics and quantum mechanics and all sorts of very complicated things, and the amount of money spent learning those academic principles pales into the tremendous amount of money that's poured into understanding the market and the way it functions. And yet we are no closer now to understanding the way the market functions than we were 25 years ago. It's simply baffling. Under certain conditions, the market is fairly understanding, and or is easy to understand, and especially in trending markets, it may appear that we understand quite a bit, but on closer examination, when the market becomes choppy or it waves like a flag in the wind, you can throw most of the current theories out the window. Especially, this is June of 2009, and we've just gone through a credit bubble that has basically made efficient market theory look crazy. Chaos theory assumes there's a level of randomness in the market, but claims there's certain substructures that occur within the market that give you some idea about, at least temporarily, the way the market will move. I'm showing you a picture right now of some basic bar charts, or excerpts from a bar chart, and you can see that there's a formation that forms frequently inside the market, and it's called a fractal, and it's usually a bar with higher lows and lower highs, and then the exact inverse on the upside, and then the same thing here on the downside. I can honestly tell you that you cannot trade with fractals alone, and it'd be a mistake to try to do that. But when you see a fractal form on any chart, it's a good indication that there's going to be a significant change in the direction that the market has been heading. These formations are fairly common, and combined with some other indicators that I use, give me, at least in the near term, a good idea what the market's going to do. There are several systems out there that rely completely on fractals. Dr. Bill Williams has a great book about it called Trading Chaos, and I invite you all to read that. It's important for you to understand, though, that I really don't espouse trading strictly on fractals. I usually incorporate some other things. If you've seen some of my previous videos, I use the Commodity Channel Index, MACD, and slow stochastic indicator. And then, of course, you want to make sure you fully understand support, resistance, and you trace in your pivot points for the day. So here we have a real life chart here coming up, and I invite you to take a quick look, especially right down here. And if you'll recall, on our previous slide, what a fractal looks like, you can see here a perfect fractal formation and a corollary move in the market. Now, just to be devil's advocate here, you need to look right here. Here's an incomplete fractal. You can see it has a 2 descending, and then a lower low and a lower high, and then we're almost to a fractal right here, and then the pattern breaks down and off you go. On the other hand, here we have a well-formed fractal, and the market takes off in the exact opposite direction and carries on. It's important to look for these things as you trade, and when you combine them with the other indicators you are using, you can get a great idea of what's going on. Here's another fractal that indicated a change in direction. We initially had a formation here that didn't form a fractal, came back, retested a high here, and you can see here's a perfect fractal formation, and then the preceding, the following drop in the price action for that day. Your ability to spot these fractals and incorporate them in your trading will greatly improve your trading, and you'll have an advantage most people don't have. I don't know. Some people use fractals to trade, and it's incorporated in some theories, but it doesn't enjoy widespread acceptance yet. I write about fractals at length and all kinds of market theory, and I have a wide variety of charts I've traded for you to inspect at my blog, which is at eminimaven.com, WordPress. I invite you to stop by and have a look at it. It's widely read, and it's been quoted in some fairly good newspapers at this point. And enjoy yourself, and good luck in all your trading. Have a great day. Bye.